Hi everyone, welcome to Investing Mania. Terry here. When it comes to investing, are you confused about all these terms? Frankly speaking, I heard about all these terms a lot, but as an accountancy degree holder, I didn't even learn all this in school.
Haha, you are a loser.
If you are like me, don't miss out to this video which I will break down these seemingly same investment tools, show you what are the differences, the pros and cons of each, which one is more suitable for you, and my favorite choice. Some current investors might claim that index fund is better than ETF without the added temptation and the possibility of fractional and recurring investment. How if I tell you that fractional and recurring investment is available in ETF too, and there's one more super useful money-making tool that ETF have, while index fund does not? Let's find out.
Till I can't no more. I got the horses in the bag.
Before we continue, I would appreciate if you could help me to smash the like button and subscribe to our channel. As an appreciation, I'll show you a video of a cat comforting a dog. Corporations issue stock to raise money for growth and expansion, such as setting up new branches, developing new products, or etc. For us, a stock is a security that represents a fractional ownership in a company. When you buy a company's stocks, you are purchasing a small piece of that company. Stocks can be traded in stock exchanges, and it is easily available nowadays because you can sign up a stockbroker's account using your phone in just under 15 minutes. Check out this video for the sign-up process of Tiger Broker's account and how you can win up to one Tesla share worth around $700 US. However, investing in individual stock can be very risky because if you make the wrong bet and the stock price just go all the way down, you will end up losing all your money.
Jialat liao, all my money in Apple stock. If I lose all the money, I got no money to buy carrot already.
Unit trust and mutual fund are like brothers. The only difference is their legal structure. They are both a basket of shares, bonds, real estate, and more. The fund manager will gather all investors' money into a pool and invest the money into this diversified portfolio. As these funds need active management by a fund manager, you will need to pay an annual management fee between 0.5% to 2.5%. Imagine if you invest a fund that provides an annual return of 4%, but the management fee is 2%. It will really hurt your portfolio overall. And even if your portfolio is in a loss, the blood-sucking fund manager will still pocket the 2% management fee from your money.
Wapiang, I'm not a stupid vampire leh.
One day, a guy named John Bogle, he came out and said,
I'm sick of mutual funds' high management fee.
And he uses his magic to create the world's first index funds called Vanguard 500 funds that tracks the return of the famous S&P 500 index. This passive management type index fund will only cost you a super low 0.04% annual management fee because it doesn't require a fund manager to manage it. In 2018, Warren Buffett Koko issued a challenge to the hedge fund industry. He said,
Your management fee is so high, but your return is like kana sai.
Not long after, a guy named Ted Siders from Proteus Partners LLC took up the challenge and tell Warren Buffett Koko,
Take back your words, idiot.
in the end, they placed a bet of $1 million US on whether the hedge funds or the S&P 500 will perform better in 10 years' time. But in just 8 years' time, this is the result.
お前はもう死んでいる。何?
You must be wondering, why 8 years? I thought they said 10 years. It is because Ted Siders considered defeat in just 8 years' time. He posted, for all intents and purposes, the game is over. I lost. And Ted Siders become Ted Siders.
Hooray! Warren Buffett Apek is the winner.
The hedge fund's total return of 22% is nowhere near S&P 500's return of 85.4% in just 8 years' time. ETF is a short form of exchange-traded fund. It is very similar to index fund, but the main difference between an ETF and index fund is ETF can be traded during the day, and index fund can only be traded at the end of the trading day. Like I have said in the beginning, the added temptation and not having fractional and recurring investment have discouraged most of the investors to invest in ETF. How if I tell you that by using Webull, not only you are able to buy fractional ETF and stocks, You will also be able to invest recurringly on every trading day, every week, every 2 weeks, or every month based on your own preferred schedule. Besides, we will also provide zero commission rate for US stock, options, and ETF trading. If you are interested, you can sign up using my referral link in the description below to receive $120 worth of Microsoft fractional shares if you make an initial funding of at least 2,000 Singapore dollar, execute 6 buy trades, and maintain a net cumulative deposit of at least 2,000 Singapore dollar for 30 calendar days. Besides, there's this one super useful tool called Option, which you can use with ETF to earn more money while waiting for the ETF price to go down to buy, or while waiting for the ETF price to go up to sell. To understand further about this cash flow option strategy, you can refer to my previous video here. I'll also put a link in the description below and at the end of this video. If you are a high-risk taker, owning a growth company stock may work out the best for you with the potential upside. If you are a medium-risk taker looking to diversify your portfolio, or someone who prefers recurring investment to dollar cost average, index fund and ETF will be your best friend. I wouldn't suggest you to go for unit trust or mutual fund because the high fees will eat into your investment and you may end up losing money in the long term. I have a friend who was in the same batch as me in Kaden Chang's Value Investing Masterclass. She had tried many investments, and this is her experience sharing on unit trust during her interview with VIA.
I started investing before I actually joined VIA, but the things that I invested before was more like autopilot, like unit trust, but I lost money on that. Investing is a game. It's like you lose some, you win some, but overall, you must win.
Furthermore, it is super easy to open a broker account in just under 15 minutes. You can gain investment knowledge very easily nowadays. Just spend some time searching in Google, watch some YouTube video, or just
Subscribe to our channel lah.
Among all 4 investment types here, my favorite is ETF. I like the low fees and diversification. By investing into an ETF called VOO, which tracks the S&P 500 index, I can invest into 500 large companies in the US such as Apple, Microsoft, Amazon, Google, Tesla, and etc. in one single transaction with super low fees instead of doing 500 buy trades and pay the transaction fees 500 times.
388, 389. Damn, not finished yet.
Faster lah, you.
And with the cash flow option strategy, I can sell options on the ETF to earn premium, besides benefiting from the capital gain in the long term. The more the merrier. Do join our Telegram channel and group if you are interested in our daily update of hot finance news and simple market analysis. So that's all for today. Thank you so much for watching. I'll see you next time.